Traders at Access Bank at UBA expect the T-bills market to remain active as investors seek to fill unmet bids. On the bond side, 2031 and 2033 maturities dominate as the most actively traded bonds as pockets of demand surface on the mid-end of the curve. Chuka Nwachukwu, chief dealer and head of trading at UBA, joins me now for more market movements. Chuka, thanks a lot for joining us on the show today. I almost made a blunder there, but let's start really now with how robust we have the liquidity position at this moment.
Yeah, thank you, David. System liquidity have been very liquid. In fact, Monday, system opened in a positive of about 1.4 trillion. As at Wednesday, yesterday was Wednesday, right?
Yeah.
As at Wednesday, it was around 2 trillion. So that's actually affected trading on the fixed income market naturally.
Yes.
And then, of course, we expected CBN to come in, which they did. It was a normal auction. On Tuesday, it was about 600 billion that was offered.
Sure.
About 620 was sold. However, subscription was over 1 trillion. Yeah, so those unmet demands actually filtered into the secondary market due to liquidity, like I said earlier, and then of course that has actually affected trading. So we've seen yields on the TV side, drop slightly, as well as on the bond side.
But what sort of stories do these OMO auctions tell when we are looking at the full print for the year?
So if you observe for the past 2 months or thereabout, the OMO maturities have not gone beyond December, usually November, December. Around the last one was 80 days, 84 days, right? So the thinking behind it, or I think that the DMO as well as CBN have a strategy to not to offer OMO above December.
Yeah.
This is being the reason being that they expect rate cut within that probably around that December ending, and so if you see the strategy, that's exactly what they are trying to do. So we've seen OMO issued at short time, and though you see the yields above 26%, but of course, technically, if you look at it,
it's not as attractive as it looks.
Yeah, so.
Yes, and touching on yesterday's T-bills auction as well, we have the volume, 480 billion naira on offer. Walk us through the subscription, allotment, and then the stop rate.
So we had about 480 billion was on offer, above 533 billion was sold. Subscription again was over 1 trillion. Right. So, but then the take is that the yields moved up slightly. Okay, this is just to encourage more local investors. Don't forget that NTB is more of local investors. Why OMO is more of foreign investors. So we've seen that pattern over the past few weeks. We've seen that yields gradually begin to inch up. About 4-5 weeks ago, these yields were around 16 levels, and now it's around 1 year is around 17 plus levels. Yeah.
And then we're also seeing that the stop rates are quite mixed. 91-day paper. Walk us through the numbers here too.
Yeah, so the stop rate, mostly the longer end is what you actually is always attractive. If you watch the subscription as well as what was sold, it's about over 95% was for the longer end. So it makes more sense, and especially if you are building position, you have to have that longer end, in your book, just so it helps you to also not only increase your the interest, also give you a breather in terms of investment. Now, let me just digress a little bit to the OMO auction. So the problem is, you see that a lot of people are not so keen. Rather, a lot of people want to buy the NTB because it's longer. Now, if you buy a shorter end OMO, which is the one of last, though you look attractive, but again, November, December, when it matures. What do you do with the liquidity? Yeah. So what's if government, CBN cut rate, and then of course we see this you drop.
You don't want to be on the chopping block.
So it would not make any sense. You bought at 26%, and then you're trying to reinvest at 14, 15 levels. Yeah.
And I'm talking about expectations of a rate cut at this moment now. Before we get to that, the market is already doing its calculations, especially looking at the inflation print for August. How do you see these market signals also define what we should expect come next week? Today is the last trading day for this week, as tomorrow is a holiday. So what should we expect come next week? And then in terms of inflation print, where do you think the numbers will settle around?
So for next week, I think that most traders will be cautious. Considering the fact that inflation figure is almost, should be out maybe in the next 1 week or 2 weeks. And so traders will have to obviously be cautious, except those who lost at the auction. Of course, what do you do with the liquidity? So it makes more sense for most of these traders to come into the secondary market. Mostly look at the longer end. So for me, the inflation figures, I don't expect inflation to go up.
Drop as much as we see, like the likes of Ghana.
Yeah. So the last one came out at 21.7.
8%.
Yeah. So all the parameters have been stable. Exchange rate has been stable. Gas, which is petrol product, has been stable.
Yes.
So these are the indices that actually affect inflation.
But I'm even still concerned around the narrative around money supply growth. So many years, the focus is looking at the stability in fuel prices, FX stability, imported inflation is now much more manageable at this point, but we still have to look at money supply growth. How much of a concern is this? Yeah,
so let me just talk on the fuel supply. Yeah, 2 days ago or thereabout, the government announced that there will be 5% tax in petrol. That obviously is going to cause a bit of panic. So a lot of people will want to start, buying, just to fill in their, start buying from. Should I use the word panic buying now? Okay. So for me, I think that the government is gradually, bringing in stability in the system. The FX has practically been stable. Inflation is also partly be stable. And then, so in all, you can see that the objective of the CBN is governor, in terms of price stability, is working, sort of. But for money supply, if his objective is price stability and stuff like price stability is affected by inflation, then it will continue to mop up. The CRR, I don't think the CRR will ease anytime soon, because the general belief is that as long as you have much liquidity in the system, most of the banks chase FX. I still feel that it will be stable.
We'll leave the conversation here for now, Chuka. It's always a pleasure having you here in the studio. That was Chuka Nwachukwu, Chief Dealer and Head of Trading at UBA.